Right, let's unpack those market movements with Makwe Masilela, who's standing by. Makwe, so yesterday the story for the negativity was around the U.S. jobs numbers that came out, signaling that the U.S. Central Bank is going to continue increasing interest rates. Today we're about just under 1/3% to end off the trading day in the red. Is the story still the same, or are there other catalysts that have informed the movements we saw on the JSE today?
I think it's a build-up, because the minute you start getting good economic data, that cements the fact that the U.S. Fed will continue to increase rates aggressively. And we know that for most central bankers, in order to maintain that interest rate differential, then they will also follow suit. So now markets are looking ahead to the inflation number. And should that inflation number be more than the market forecast, then definitely people will continue to expect that aggressive interest rate hike going forward. But also we've seen that China as well ramping up, their COVID-19 measures that as well had an impact on the markets. And with this whole thing of the bonds selling off, we know the inverse relationship between the bond prices and the yields. Then hence we see the yields continue to go up, and that tends to be negative for stocks. So I think it's an accumulation of so many things. And unfortunately, we just have to deal with so many negative things. And remember also the escalation of the Russian-Ukraine war as well. As we've seen that Ukraine is now even asking the G7 for some of the Air Force, what do you call it, the weapons, so that they can get to deal with or be able to fight back when it comes to the Russian issue.
No, that's very true. A lot of negative things. And another one is the price of Brent crude, Makwe. We were having such a good run in terms of the cheap price of Brent just last week. And now we're back to levels at around $94 a barrel. What are we seeing as the big reason here? And will we see another drop anytime soon?
Yeah, probably it will happen, especially if the likes of IMF, they're right by saying the economic outlook is not looking okay. So in an environment where economy is not growing, then definitely it's not going to be any demand. And also we've seen that China, with ramping up with these COVID measures, then that definitely is going to affect the global fuel demand. Remember, China itself is the biggest or the largest crude importer, and also the second biggest consumer when it comes to oil after the US. So if we are going to get a recession, then definitely that is going to affect the demand. And remember, we also had an output cut coming out of OPEC, but that happened at a point when OPEC members, some of them were below target. I think they were 3.56% barrels per day, 3.56 million barrels per day below the target. So that 2 million cut, probably we might get the actual cut to be anything between 1 million and 1.1 million. And most probably half of that should be coming from their de facto leader, which happens to be Saudi Arabia.
Some company updates now, and we begin with Datatec technology company. They had a trading statement out today, Makwe, saying that they're expecting earnings to be down between 26 and 36%. And very interestingly, they're still continuing with the story around global supply chains, and that emanates from the lockdowns in China. So they had a shortage of semiconductors, and they anticipate that these challenges are going to continue for them. What was your assessment of that trading statement?
That's right. That semiconductor shortages coupled with the issue of Ukraine, we've got inflationary pressures, and also, as you mentioned, the Chinese issue. But yes, we expect that to be there for some time, and that will definitely affect supply chain going forward. But I think the good thing is that they managed to sell their subsidiary. I think they were only 71.2%, and the proceeds thereof, they'll be paying us a special dividend of 12.50 Rand per share.
No, that's absolutely true. Let's get into matters around Exemplar. They're also releasing an update today. I'm not sure, what did you make of what they had to say, just given the environment that they're also operating in, which is a thread, I suppose, that goes through most of the industry?
I think the guys are well placed because remember they own most of the township and rural malls, the likes of your Icon Mega City in Bushbuck Creeks, the Lusiki Plaza, the likes of your Phosphor Chris Honey, crossing, I think it's in First Flora, stuff like that, Alexander Mall. So the guys expect good earnings going forward. I think they're talking 51.6%. Remember, they are operating in an environment where more than 50% of the people are using more than 50% of their income on food. So most of their malls are anchored by well-known food retailers, and also you get these huge retail discounters. So footfall when it comes to those malls is very decent compared to the upper market malls. Hence, the guys will probably continue to do better than the prime malls in other locations, call it your higher end markets.
Yeah, I did find that very interesting in that they still have a very strong circulation of money within the business, especially in the areas that they operate in. So as you say, really encouraging prospects for them, particularly in their core market. Makwe Masilela, as always, thank you very much there. He's from Makwe Fund Managers, wrapping up the day's business with us. And that is all your business news for now. We'll be back, of course, the big news that is impacting the economy immediately as Transnet, and we'll have further updates from Transnet themselves in the next bulletin.